left, right out. Hey, we got it. The Fed came out. They raised a half point. And what happened? The market goes up almost 1,000 points. The Dow, incredible move. One of the biggest moves I've seen in a while. I mean, that's a insanity. I've never. That's to me. That's almost capitulation upwards. Earlier in the day, you had the 10-year saw, over 3%. It came back down, and this rally supposedly is all driven by Powell saying that the a 75 basis point rate hike is off the table, which it maybe that should be it, but maybe a 1.5% should be on the table. But so you got a couple. Either what the CNBC is saying is that this is their the market is reacting as though they can complete the soft landing. I say it's more reacting as an inflationary hedge, like stocks are typically a decent inflationary hedge. So, you know, they're calling the Fed's bluff, like you are way behind the curve on this thing. And if you're so concerned about inflation, or and this is my opinion, but anyway, you're way behind the curve, so we better put money somewhere. So let's run into this almost like capitulation moment. But you got to think about all the ramifications. Look at all the supply and demand disruptions going right now. You look at the East Coast, diesel distillates, diesel products are at all-time low. You look at the history of that. There's a good article on that that came out talking about the refinery capacity has been halved since 2009. Just all kinds of weird, strange productive things that aren't happening. Then you look at the housing market, which I've talked about this. So people are asking what's next for that? Well, you already have price declines in several major markets. You have a declining amount of mortgage creation. You have, and not only that, the Fed is stepping aside of that. If you look at June 1st, they're going to start selling into the market. I think it's like 17 billion in mortgage-backed securities. So June 1st, but at the same time, I'm saying why wait to June 1st? Supposedly inflation's out of control. It is out of control, more so than they even think. So why wait? Why are we waiting? Why only 0.5%? But anyway, June 1st is that, and they're having, I guess, another meeting in June. But I don't know what to tell you. It's pretty insane what the market is doing there today. I'm at the point where I'm still short or betting on the short side. I got my head ripped off pretty much today, but my plays are always, like I said, I always buy the options or past 3 months, or I'm always looking down the line on that. So this doesn't bother me. I'm like, in fact, it might be another opportunity to get even more short because I think the housing market's been popped, and we're going to see that air start coming out of it. Like I said, prices have declined in a number of markets. You have mortgage rates now solidly over 5% for a 30-year mortgage. I mean, you've pulled all this demand for that stuff forward, and now we're going to actually see, we're going to actually have to pay for that. So Powell is very limp wristed in this thing. I mean, I can't believe he told them that they were going to take the 75 basis point cut. The whole, I can't believe people actually believe that because they've lied to us the last couple of years. Whatever, inflation's not there, transitory, blah blah. Oh, we're going to do this and that, and they haven't done anything. And basically what this is telling me, this meeting and whatnot, is they are incapable of fighting this thing. They're inept. They can't do it, and they're going to wait, and they're allowing us to feel the pain even longer. There's many of us. If you look at food bank demand, there's a lot of people that are falling in the wayside because inflation is really, or rising prices are really destroying their wealth. And he said something about wages, which is incredible. He's like, wages are, going up incredibly high. And he's like, well, inflation's eating into some of that. No, inflation's eating into all those wage increases. In fact, you're not getting a wage increase. You're getting a wage decrease once you take into account the rising prices. Your standard of living is being stripped from you and an increasing a rate, and they're not doing anything about it. They're this minuscule half rate cut. Look, well, I still stand by my call that they can't go above 1.25, and right now they're at 0.75 to 1%. You got one more. You got a half a rate point, and then you're at 1 to 1.5. So then maybe you got 75 basis points left before this thing really starts kicking off. Like you start seeing the housing market just blow up. You start seeing some other things. Like there's a good article by, I think is a former, she worked at the Fed. I can't remember her name off the top of my head. Today it came out. She was talking about the same thing I've been talking about, the zombie companies. And she referenced 1 in 5, like a 20%. And I thought it was higher than I thought it was closer to 30%. But either way, 20% of the companies that are zombie, the companies that have to roll over debt, that are now going to pay an exorbitant amount of excess to access that capital because of the rising interest rates. They got so used to the cheap money. You got companies that shouldn't be in existence, and what happens is you have that capital going into those companies instead of more viable companies, and you get all this malinvestment. And this has to correct, and it's going to correct. These interest rates will correct it, and the market doesn't seem to understand that yet, but it will. I mean, because eventually, when it's staring you out in the face, you're going to have to do something about something. You're going to have to act, and I don't know who's buying into this, because there seems to be a generation of investors that have never seen anything like this or haven't really studied economics. They just seem to follow along the Jim Cramer CNBC talking points line and are willing to throw money. Well, I know this for a fact. There's a lot of people, you talk to people that work around these individuals. They have their own train of thought. They don't necessarily understand economics. They understand personal finance to a certain extent, and they act in a rational manner when they're trying to put money into certain things, but they also act in a herd mentality. And there's also algorithms. There's a lot of things that go into this, but it's crazy. Gold is up, but it's been, like I said, gold is not an investment like everybody, like a lot of people say. Gold to me is a store of value in the long term. That's why I have some of it myself, and silver. But those are long-term things. I'm not looking for it to pop. I don't care. If anything, when you have this like a collapse, it should go down less than everything else. And you would like to see it go up, of course, because then it should be going up. It's a manipulated market. There's a lot of paper assets that are on there that aren't necessarily tied to the physical resource. I'm looking at the bond market now after hours. They're at 2.92. I expect that to still go up because they still got a price in the next rate cut. Or the rate cut. Well, that will be coming soon too. But the next rate hike, which will be another half point more than likely, continue to see the numbers. Now like I said, I've said this before. They might use an excuse to do this, just a half point, not talk about the 3/4 of a point, or maybe even just do a quarter point, because maybe the inflation numbers will go down because you have a lot of demand. You have a lot of supply destruction, a lot of demand destruction. It's really hard to see where the prices are going to be going month to month, because you might have more demand destruction in a market when you look at like housing, and you pulled out demand for it, so you no longer have that demand, and there's going to be an ever increasing amount of supply coming on the market, so there's downward pressure on that. And granted, what he has done today, that is a downward pressure movement, even though it's in the face of whatever, probably 12, 13, 14% inflation. So it's still negative, still accommodative, but it is more pressure, that less pressure on the upside. But anyway, so then you go to like the supply disruptions here, and I just got something going on. Hang on real quick. I don't know what that is. Well, people. I guess I can do that. I will have to go here in just a second. But anyway, so if you look on like the other side of things, where you have oil and gas, whereas the supply of that is very constrained, and now we're seeing those prices skyrocket. And I don't know where diesel is going to end up. I have no clue right at this point when I'm looking at the numbers of what diesel is out there, what diesel products are available. It could get scary quick, man. It can get real scary. And I don't know what pals up there. Oh, I would be freaked out, and I would have told them there's nothing that we will not. I thought he said that there's nothing they won't do, but apparently 3/4% rate hike is out of the question. That's why the market's interpreting it. But anyway, so then they're also rolling up. So they're going to be selling bonds. They're going to roll that off. I think it's 47 billion or something like that. 17 of it I know is mortgage-backed securities starting on June 1st, and we'll see that. And that's their cap. So it could be lower than that, but we'll see, because I'll be looking at the balance sheet. We'll see what's going on, but it's not good. I don't know what the market's thinking. You like on the upside, when the super expansionary monetary policy, you don't fight the Fed, and on the other side, even though it's highly accommodative, you don't fight the Fed. It's going to bite a lot of people in the head. I know that a lot of people are thinking this is an inflationary hedge, and in a sense, the stock market is. But when that turns the other direction, which it presumably will. I know I'm calling this is stagflation. I know it sounds counterintuitive. What I'm saying is like there's going to be areas where there's going to be price decreases. There are going to be areas when there's huge price increases. So this is stagflation in a sense. Still accommodative monetary policy, and ever increasingly tightening now, but then also supply and demand disruptions that are causing prices to rise. It's freaky. It's worse than you've seen in the 70s if you look back on that. If you gauge everything the same way you would. And I hope that everybody has got some assets because you should have been preparing. I wish I was trying to, but I had life circumstances. I haven't been prepared. But people around me too, I watch them. People just seem to think that everything is going to be the same no matter what, until it's not. And we're seeing, the breakdown of society right now in a sense. I mean, a lot of things. Oh, the other thing is, I haven't got to this. I want to look into it. So during this whole Roe versus Wade thing, apparently Pfizer released another 80,000 pages on their from their vaccine data stuff. And I will find out what's in there. I haven't really looked at it. I know some people have brought to light that there's some interesting stuff in there that was pretty much, you wonder, because there's another vaccine that's having a hearing. It's called Novavax, and it's taken the FDA months to look at that one, even though it's approved all around the world. There's a plethora of data on it, and they went through the phase 1, 2, and 3 trials for the FDA and been working into it. It's taken them forever, but the Pfizer and the Moderna stuff, bam, it's like, how do you go through all these documents that quickly to do it? But then it takes you forever for the Novavax one that's based on old technology. It's a protein adjuvant vaccine, and that one takes forever. But these newer technologies, so there's something that's not smelling right in that in the whole thing, and we all know that at this point. But anyway, I'll talk to you later. Peace.